welcome to the weekly trend trader, how to do momentum trading. What we're going to do, we're going to consider 5 stocks that have been absolutely explosive, that have been moving with tremendous momentum. Before we do that, don't forget to subscribe. If you have subscribed already, thank you ever so much for your support to the channel, to like this particular video and to share it with your friends, because you may know those who would like to run a part-time trading business alongside the business that they're running or the job that they're doing at the moment, and this strategy lends itself very well for that. Also, the notifications bell, along with subscribing, don't forget to turn on the notification bell, because that's the way that YouTube can alert you to the fact that we've uploaded another video. And the videos that we're uploading obviously are time critical videos, so it's time critical information that we're sharing with you. Okay, so let's get to it. Let's look at the first stock, and the first one is Tesla. So Tesla, absolutely explosive stock. We've got the stock split that's coming up on the cards. By this time next week, the stock split will be done. So let's have a look at this one. Let's go back to when it broke through, and let's look at September 2019 into October. We see there where the market breaks through. September, October, it breaks through both on the RSI and it breaks above on the 52-week moving average. So the market moves up there, but then in November we can see that 2-week pullback giving us our setup. Multiple week pullback is a setup. So we've got a 2-week pullback in November. If we look at the RSI, we've also got a rounding bottom. So 2 things here are saying that this market is about to reverse. A rounding bottom, 2-week pullback. That first week in December, we get that first green bar. It's at $350 a share, and we get 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. That 10th week's a flat week. We do nothing. 11 weeks, and on that 11th week, the market drops back the following week. It's a red candle, and we take our profits. Absolutely beautiful momentum trade. Anytime you get 8, 9, 10 weeks in a row, that's a beautiful momentum trade, and this was a very good example of that. Then in February, the market drops back. It's the COVID situation, slowdown in the economy. Tesla's not too badly affected by this, but nonetheless, everything falls when the markets are falling. So Tesla falls back along with everything else. Falls back to the 52-week moving average that is rising. There in March, we can see the market hits the 52-week moving average. We fall to $350 a share. The following week, there's a green candle, and on the RSI, we can see a inverse head and shoulders is forming. It's like a double-headed, which is called a complex inverse head and shoulders. So it's complex because it's got 2 heads bouncing on the 50, and the left and right shoulder around the 60 level. That gives us an indication to buy this market. We get ready, it gets going, we buy this market, and we get 1, 2, and on that 3rd week, they're at $700 a share. It's a flat week. We do nothing. The next week, we get that high testing pin bar, but it's clearly a red candle, and so we take our profits. And the market drops back there. We can see it's formed a little base because we bounce off that $700 level. Next week, we're back up at $800. So we buy this one again, and we get 1, 2, 3 flat weeks where we do nothing. We maintain the position. The next week, we're up at $900 a share. The week after, we're at 900, and we leap up to 1,000 on a high testing pin bar. Closing back at 900, the week after that, from 900 to $1,000 a share. Then Tesla gets that red week at $1,000 a share, and we take our profits. Nice little momentum trade. Then in June, we can see 52-week moving average is still rising. The stock is on fire. We can see that little V spike bounce on the RSI in June. And so we buy this one again. It's an explosive candle, starts the week at $1,000 and rises all the way to $1,200. We buy that again and we get 1, 2. On that third week, we get all the way up to $1,800 a share. We high test off that 1,800 level and we close at 1,500 where we take our profits. Lovely momentum trade again. And that next week, the market still has another red bar, so we fall back some more. We bounce off that 1,400 level. The next 2 weeks are flat. However, we can see a base building around the 1,400 level. There's a rounding bottom in July on the RSI. We can see that 1,400 level is key level. So again, the market goes beginning of August and we get 1, 2, 3. This last week, we got all the way up to $2,200 a share. Absolutely amazing. Tesla stock's been on fire. With the stock split, there might be a little bit more for it to go. But then, have a look at the RSI. When we look at that RSI, it's clearly above the 80 level. Start to get concerned whenever a stock gets above the 80 level. If you just look back at February a minute, look back at February, what happened? We got up to 95 on the RSI, but then we had that collapse. Now we're above the 80 level. Stocks can move to 90, 95. They're overbought, but they can still go that high before the correction. So we could have one more week here, or we could find that the market starts to correct because it's just way too overbought. So that's Tesla. Very interesting stock. Has been on fire. It's a stock that's had so much public participation. Absolutely incredible. But yet I can see on the RSI that this one is going that little bit too far, too fast, and it needs just to slow down, either trade sideways for a few weeks or pull back and just pause for breath. The market's gone up. It's overbought. So that's Tesla. Let's have a look at Apple. So as we look at Apple now, let's look at Apple from this year. Let's look at the situation there that we got to. Look at January this year. Look at that RSI. The RSI is up at the 90 level in January, but the fall doesn't come straight away. So we hit $320 a share. We drop back to 300 in the next 2 weeks. Then the market runs back up again and we get all the way back up to $330 a share. That next week, after 2 weeks up, in mid-February, we can see that high testing pin bar just below that $320 mark. RSI still at the 85 level, high testing pin bar, and the market collapses all the way until March. Then when we look at March, look at the RSI. It's not the most perfect symmetrical pattern, but there's a clear inverse head and shoulders on the RSI. So that by the time that pattern is visible, the market is at $270 a share and it's a green candle. We love that. We're in. We've got the reversal pattern. It's above the rising 52-week moving average. The RSI is telling us to buy this one. So we buy this one at $270 a share and we get 1, 2, 3, 4, 5, 6. 6 weeks flat, we do nothing. 7, 8th week is a red candle. And at $320 a share, we take our profits. Now, the next week, we get a green bullish candle again. Now we can see the rising 52-week moving average. We can see the RSI still bullish. We can see that this stock has momentum. So let's buy Apple again. We do at $330 a share. And we get 1, 2, 3, 4, 5, 6. On that 7th week, that red candle at $390 a share, we take our profits. Absolutely fantastic trade. Then the market drops back again to the swing low. It drops back to $360 a share. We've got that swing low. The next week is bullish. The market opens at $380. closes the Friday at $420 a share, and we are back in. The market is bullish. We've got a V spike on the RSI in July. Everything is telling us to buy this one. The V spike, the 2 weeks of selling, we've got the setup we want. We're at $420 a share. We buy this one and we get 1, 2, 3, 4 weeks in a row. And this last week, we rang the cash register at $500 a share and we took our profits. Fantastic trade. 4 weeks in a row, very powerful move. But let's have a look for a moment at the RSI. Now look where the RSI is. Remember, 80 is overbought. We're at the 85 level on the RSI. We've had our first red candle at $500 a share. Be very, very careful here of putting on a new trade. We're overbought. The market needs to correct. We've put in that one red candle. Just be very, very careful. This is not a place that I would be adding to and buying more with the stock at the 80 level. We will need to wait for this one to drop back and then we buy this one later on. It could just trade sideways or it could correct, but we know the RSI is telling us this stock, Apple, is overbought. Let's have a look at Amazon. So let's look at Amazon the same time period. Let's look at just what's happened this year. January, we had a lovely little bounce there. If you look at January, a bounce off the 52-week moving average that at that point is rising. So January, nice little bounce there, late January into February. End of January, we've got that candle that goes up to $2,000 a share, and we get 1, 2, 3 weeks from that 2,000 level. 2 high testing pin bars. We get a green one, then a red one. At 2100, we take our profits. Fantastic trade. Then it's the COVID situation. We've got those 2 high testing pin bars, both bouncing off 2200. The market drops back with the COVID situation, slowdown of the economy. We drop all the way back to $1,600. Then we get this bullish engulfing green candle that comes in March. We can also see a V spike on the RSI. This is looking bullish. So we buy this one and we get 1, 2. Third week is a flat week, so we do nothing. On that next week, 3, 4, 5 weeks of momentum. And then on that red candle at 2300, we take our profits. Absolutely fantastic trade. So it's April and have a look at this. We get that low testing, we get that spike there on the RSI, tells us to buy this one. Everything's looking bullish. We've got a rising 52-week moving average. We're at $2,400 a share, and we buy this one and we get 1, 2, 3, and on that 4th bar, it's a low testing pin bar. We take our profits because it just takes out our stops. However, this is still a bullish candle. So what do? Well, we buy this one. We get, as long as the next bar is a green bar, we buy this momentum. We do. It's at 2,500. We buy it at $2,500 a share and we get 1, 2, 3, flat week, 4, 5. And on that 6th bar, that red candle that closes at 3,000, we take our profits. Fantastic trade. Then the market there, we look at the RSI and it's not 100% clear what's happening on this one. It does slowly grind higher, but it wasn't clear because we had that big spiking bar the next week at 3,200 that closed all the way down at 3,000. But the market did grind higher on Amazon. And where did we close last week? 3,400. Just a little bit of caution on this one now, because in July, look at the RSI, we went up above the 80 level. Now we're back on the 80 level. This market, this stock, the NASDAQ that Amazon trades on, and this individual stock is now overbought. And we're expecting either the market to now drift sideways and not have big momentum for the next few weeks going forward, or a bit of a correction to the downside just because this market is getting a little bit ahead of itself, it's overbought, and our indicators show us that. So that's Amazon. Let's move over and look at our next stock. Now, before we do that, if you're really enjoying this, make sure that you subscribe, because we really appreciate it when you subscribe. It means a lot to us. And also, if you have subscribed already, we really do appreciate that. Don't forget to like this video as well and really share it with your friends, because this works so well. You only have to check it on a Friday, and it can work very well with someone who's running business and at the same time trading the financial markets. Also, drop us your comments, because that's very important to us. We want to hear when you caught 2 in a row, 3 in a row, 5 in a row, 7 in a row, or even the amazing 10-week move in a row. Drop us the comments, tell us what you caught, tell us which indices or which stock you caught. Absolutely fantastic. We love to hear about your success. Okay, so let's continue. Let's have a look at Nvidia. So here's Nvidia. Let's go back to this year. Look at January and February. The RSI, we can just about there see a double top. And also you can see a high testing pin bar in February. That's where the market ran up. We got that 3-week move up, high testing pin bar in February. Then the market collapses and we fall all the way down to $180 a share. We bounce off that level. If we look at the RSI too, there's a spike in March. These two things, that low testing pin bar at $180 a share, the V spike on the RSI shows us that there's momentum. Also, the market the next week closes above a rising 52-week moving average. This is all a sign of bullishness. So we have a go at this one. We buy it at $250 a share, and what happens the next week? It's a red candle. So we get out on that one, and we get a small loss on that one. But then the next week, what happens? Market still rising, 52-week moving average is still rising, RSI is bullish. Remember, above the 50 level, the RSI has a bullish bias. Below the 50, we have a bearish bias. So we've got a bullish bias, rising 52-week moving average. We like everything about this one. So we get back in at $260 a share, and we get 1, 2, 3 weeks out of it. On that 4th week, it's a red bar, and we take our profits at $280 a share. Again, after that 280, we get another bullish bar. This market really is on fire. We're now at $310 a share, and we get 1, 2, 3 weeks. Then we get that low testing red bar, and we take our profits. Fantastic trade. Then the market drifts sideways a little bit. It's not too clear at that point what the market is doing, and for the next few weeks you can see the market doesn't really go anywhere. It just drifts sideways, and then we start heading up to the 80 level. So a lot of momentum traders will stay out here, because we know that the 80 level, we know stocks can go to 90, but sometimes a bit of caution here and stay out of this one. Let's say we didn't stay out. If we didn't stay out, then on that 2-week pullback at $400 a share, there's a bounce there that closes at 420. We could have took that one, and we get 1, 2, 3, 4 last week, all the way up to $520 a share. If we were less cautious, we would have taken that last trade, even though it's very close to the 80 level. Those who are a little bit more cautious, when it's very close to the 80, they probably don't trade. So those who are a little bit more cautious momentum traders wouldn't take that particular trade. Either way, market's got momentum. It's now above the 80 level, and most momentum traders wouldn't take anything above the 80 level. So that's Nvidia. Let's go over now and look at AMD. So here's AMD, Advanced Micro Devices. We had a couple of really beautiful moves here. Let's go back a year out. Let's look at last August into September. Last August there into September, we got a multiple week, 1, 2, 3, 4 weeks of selling that drops us all the way back to the rising 52-week moving average. Then look at the RSI in September. It goes down to the median 50 level. We love a bounce off the 50, and there we bounce off the median 50 average level. Then if you look at $30 in September, we get that first green candle and we go 1, 2, 3, 4, 5, 6, 7 weeks in a row, high testing pin bar. On that 8th week, we get a low testing pin bar, red candle, so we take our profits. Lovely little trade. Then the next week, we get another low testing pin bar. We've got a rising 52-week moving average and a rising RSI. This is looking good. $40 a share. We're back in and we get 1, 2, 3, 4, 5, flat week, 6. 7th week is a red, high testing pin bar at $50 a share, and so we take our profits. Absolutely fantastic trade. Whenever you get multiple weeks in a row like that, that is a beautiful trade, and it takes a lot of patience to just hang on in there and keep on going as we trade this momentum. Then when we look in January 2020, we see the market drops back there off the 80 level. We get 2 weeks of selling, and then the next week we get another bar that closes at the $50 level. So we have another go at this one, and we get 1, 2, and on that 3rd week we get a high testing pin bar at $55. We take our profits. Then that high testing pin bar is a sign of things to come. Well, yes, it is. It's the COVID situation, slowdown in the economy. The market drops back. So we experience that selling. Market drops all the way back to March. And when we look at March there, we can see that inverse head and shoulders with the head and left and right shoulder very clearly visible to us. By the time we really see that pattern, the market's back at $50 a share. So we get an opportunity to buy this one, and we go 1, 2, 3, and on that 4th week, it's a red candle. We're out, we take our profits. Fantastic trade. If we look then again in April, there's another little opportunity for us. So we buy this one again, and we go 1, 2, 3, at $55, we take our profits. But then we notice this market starts to flatten out. We cannot get above that $56, $57 level, and so we notice that this market is weak. Market drops back again, and we notice it's in a little bit of a range. We look at the RSI, there's nothing really there for us, and so we leave this one until June. In June, look at the RSI. There's a clear bounce in June off the 50 level. We love a bounce off the 50. Bounce off the 50 at $53 a share. We buy this one. We've got a rising 52-week moving average. So we buy this one and we get 1, 2, and on that 3rd week, it's a red candle where we take our profits. But then again in July, we can see the market drops back there. We get another green candle, absolutely enormous candle that goes from $55 to $70 a share. We can see that bounce on the RSI. We're liking this one. We buy this at $70 a share, and we get 1, 2, 3 weeks out of this one. And on that 4th week, it's a red candle. It closes at $80 a share, and so we take our profits. And what's happened in the last couple of weeks? Well, in the last couple of weeks, the market cannot seem to close above this $85 level. We've gone up, we went up, beginning of August, we went all the way up to 87. Again, last week, we went up to 87, 88, but we cannot seem to clearly close above this $85 level. Then we look at the RSI, look at the beginning of August, almost at the 80. And again, almost at the 80 where we are now. The market's rising, maybe get 1, 2 more weeks out of it, or this is the beginning of a serious level of resistance and the market is cannot get any higher, and it has to correct a little bit to the downside, which is what happens when the market gets overbought, or we trade sideways for several weeks. That remains to be seen what we do, but what we do know is we look at that RSI, and this market, along with the others that we've looked at today, are overbought. Now, I know I've talked about a lot of things here today, double tops, inverse head and shoulders, RSI, swing high, swing low, and if you're new to the channel, you might not be familiar with these terms. So what I'm going to do, I'm going to pop up the strategy video for you so that you can look at that one and you can see exactly what I'm talking about and really understand the strategy. Then each week as you watch me analyze the markets, it will make that much more sense to you. If it's stock indices is the thing that you like to trade, then the other video that's on here, that is about following trends and stock indices, and that will help you with that too. So I hope you enjoyed this video. Thank you very much for watching, and until next week, take care.